Okay, use the last one I sent. You should be on this page. When you're on this page, click on take a quiz. And we're gonna take the next 5 minutes or less to complete the quiz. Let me know when you're done. Click yes, done in the chat. Just a few questions. Everybody would have their own individual way of answering the question. Just try to be as truthful to yourself as possible. So this question about 401k, it's more centered around America. So it's just for us is, do you have a savings, a retirement savings? Are you almost finished? How are we doing? Ah, stockpile. Okay, Therese, that's interesting. Akisha,
Hi.
I put the link again. You need to complete the quiz. Okay, we have a couple stuff. Oh, hedonist, interesting. Let's give everyone another 2 to 3 minutes. Nurturer, interesting. Indira and Heather. Okay. Nurturer, okay. Stockpiler. Interesting. Ooh, I'm a hedonist. Let's see this. That is true. Although I kind of shift, sometimes I'm a bit of a celebrity and other times I'm a hedonist. The last time I was more of a celebrity. Natural, okay. Has everyone finished? Conqueror, okay, Robertina. So 2 more minutes. And then we delve into it. Okay, can you hear me? Let me double check. I might have to change my audio. Okay, if you can hear me, it's fine. Perfect. Maybe I was on mute when Antoinette and Akeisha were asking the question. Antoinette, Akeisha, can you hear me? Okay. I probably was on mute. Okay, Antoinette. Were you able to do it? The quiz? Did everyone get a result now? Okay. You finished. What did you get, Jacqueline? Nurturer. That's interesting, nurturer. Hi. Okay, so while the other people are wrapping up, let's just hear from a couple. Let's have the conversation on the nurturer. First of all, do you find the personality quiz or the answers of a nurturer on point? Can you hear me now? Hello, hello, hello.
Yeah, I'm hearing you.
Okay, I said for the nurturers, let me hear from the nurturers. Indira said I've been described that way multiple times, but do you feel that is really on point? Is that really you?
Yes. Because
Okay.
originally I only knew I wanted to be a mother. I didn't want to be anything else.
Okay. And in terms of your money habits,
Yes.
is it on point?
Yes. I'm very skimpy with myself, but the least anybody else wants, I'm very extravagant. To my
Okay.
detriment most of the times.
So you always put yourself last.
I don't think so in the moment, but then when I realize I don't have anything for me, then yes.
Well, you
You
have
don't feel like last either, to be
putting
honest.
yourself last.
And they don't feel like last because usually the other need, right? It seems more important to me. So it don't feel like a sacrifice, to be honest.
It might not feel like a sacrifice, but the reality is you put yourself last. Yes or no?
Yeah, maybe. Because it feels good. So
Okay.
it's rewarding.
Okay, it's rewarding.
Yeah.
Well, there's nothing wrong with that, because charity, part of the things of being human is we also think of other people. And charity is one of the things we are supposed to do. So it's not wrong to be a nurturer. You just have to be mindful that you're not always thinking of others, especially from a financial standpoint. There's sometimes you have to put yourself first. And how is that displaying in your financial behavior? How's your saving? How's your investments?
You are absolutely correct, because stepping out into entrepreneurship, I've been a freelancer a while, and it's been very hard to place a value on my labels. I end up selling myself short a lot. And now stepping out into entrepreneurship, I really need to bootstrap and be very much better at this, because my hope is to have a workforce. I hope to have employees. So I need to be able to compensate fairly. So I really need to get better at this, a lot better.
Okay, so at least you recognize some of your behavior patterns, right? And once you can recognize, that's the first step. So you can then consciously see, okay, I need to perhaps course correct this behavior. Now, I'm not saying your behavior of being a nurturer is always bad. It's not. It's just that as you find, as we go along, looking at the different personalities, it's about balance and trying to make sure you strike a balance where it's needed, right? You're not just always getting money and it goes. Money is energy, you attract it. Where is it? it needs to be put to work, not to be always given away, flushed down the toilet. So you need to know how you're putting your money to work. And even if it is giving to someone, so that's fine.
Totally agree.
Anybody else? Nurturer? Let's get some feedback. Impressions? Jacqueline said it's on point. I'm always happy when my children and others are in need. I always put myself last. I recognize that now. And you have to put something aside and do you. Yeah. Any other persons want to talk about the nurturer personality? And what are some of the things you struggle with as a nurturer that you think really impact on your bottom line and your financials? Hello, anybody else? Who else was a nurturer? Amanda? Amanda? Is Amanda there?
Hi, this is Tracy. Can
Hi,
you hear
Tracy.
me?
Yes, I hear you.
Okay, I'm supposed to be a nurturer.
Okay,
I don't know how. I don't know.
that came about.
Sorry.
You said you don't know how that came about?
Yeah, because it's like saving. Yes, I would love to save, but like how you take naught from naught, I will put the savings away, but then I will take it back again. So it's a problem. But putting yourself first,
Mhm.
also a problem for me. I will make sure everybody has shoes, glasses, everything else, and I will definitely go with that and not feel bad about it, and
Of
not
course.
feel like I'm missing out. Even if my friends are not doing that, I have no problem. I had a 50th birthday a couple of years ago, and I stayed home and had watched TV and had cupcakes. I did not want to go out. My parents and my sister had to send me a birthday dress because I wouldn't look anything for myself, because for me it's a waste of money.
Yes.
And I had to have a look at myself and say, sometimes you really need to put yourself first. Ladies, as a nurturer, we really need to, don't have to go extravagant, but we need to take time for ourselves, because if we don't take time for ourselves, what are we showing our peers and our children how to be, independent and successful,
Yes.
being dowdy and not looking to your best or not feeling your best, but putting your best out, especially if you have children. You have to try and balance that a little bit better and show them that you can have a good time and be a mother, and everybody can have equal, savings and so forth, and be a mother or a parent or whatever the case may be. So sometimes it takes a while. Sometimes people get there earlier, but I'm getting there a bit later. But that's okay. I'm okay with that.
Okay.
I see the struggle.
So I hear a little bit of, you can be frugal,
Oh
not a big spender,
yeah.
but you struggle with saving.
I can be frugal for certain things, but
Okay.
if I see something that is a need, I will buy it. Yeah, I'm frugal. I'll take it back. I'm frugal. Yeah.
Does that frugality come from maybe your experience in living in the UK
Oh yes.
and the environment, maybe?
Yes. Living in the UK, definitely. As a Black person in the UK, you have to work twice as hard as anybody else to get the same pay. So
Mhm.
your money has to go twice as far. So you're very frugal. You have to. People always say English people are cheap, but we're not. We just have to work very hard for our money, and it has to go a long way. It has to go in the UK and also overseas. So
Yeah, my sister is like that.
yes,
Sometimes I call her cheap.
yeah,
But it has to do with also the environment as well. So
most
like I said, pretty much our money behavior is shaped by our external environment. And over time, we get programmed to do certain things. And then again, it's not fixed, it can shift. So you can be, you know, now you're a nurturer, but over time, when you change some patterns and behavior, you could become a conqueror. We had a conqueror in the group. Let's hear from the conqueror. Who was a conqueror here? Was it Robertina, conqueror?
Yes, good night.
Good night.
How are you guys doing? Well, I guess the program says I'm a conqueror.
It says you're a conqueror. So first of all, looking at it, do you agree with any of it? Yes, no, maybe?
Um, some of it, except when it came to how to blame it on your childhood. It
Okay.
indicated that, yeah, the section
What
about
did it say about the childhood?
is saying that you may have grown up seeing your parents value success as in a traditional way, doctors, lawyers, business owners. And this may have also been an environment where vulnerability and showing emotions were discouraged. Winning was the way to earn love and respect. This evolved into a lifelong habit of trying to get and stay far ahead. Constantly striving and achieving is how you maintain your power and control. And money is the yardstick used to measure your
Ah,
success. Um, Part of it may ring true in terms of um, the vulnerability and showing emotions were kind of discouraged.
yeah,
Um, but in terms of the success and how it was viewed, well, maybe it is true, and I'm just trying to accept that maybe this is what I was going through and not recognizing it at the time.
right.
Yes, because at that time, I mean, you go to the who went to the best convent and turned to did went to do medicine and who went to do law, and these were all persons in my family that I saw. But the truth is
Ah,
that I was never interested in any of those professions.
you weren't interested, but you're still influenced by it.
Well, I think so. Maybe yes, maybe kind of psychologically influenced by it. But it had to do with maybe part of it was correct in always striving to stay ahead. I think it had to do with being able to provide for others rather than for myself. As I heard the young lady was saying a while ago, I mean, you try to take care of others and then you put yourself last. What
Yeah,
I tend to do, I work because it talks about working and you always working. This is something I always do. I work long hours and I'm never really idle. When I do take idle time, I do
Mhm.
relish it and I go for a long time idle. But other than that, I love to work because I always think of okay, this person needs this and this person needs that, and it's I get the joy out of giving it rather than spending it on myself. As it there was a question they asked: if you got $500, what would you do with it? Doesn't make a difference to me. Just put it there until I get somebody to give it to. Basically, that's how I think. So it doesn't bother me. I don't think I always tell myself I'm not very high maintenance, but I
yes,
can, but I can be very not just me. I can be very high maintenance when I choose to. But it's not really a need. It's not a need for me. I it's quicker for me to splurge on somebody else than to splurge on me. But when I do splurge on me, I do really go overboard at times. And then I have a moment and then I'm done with it. Because the satisfaction for me is not in the splurging really, but in splurging on others rather than on myself.
okay,
Mhm.
that's interesting. So sometimes when you look at these, so there's a psychology behind these personality quizzes because they're what we call big word hypnosis quizzes. This is about more self-motivated quizzes. So if you are a little honest with yourself, it really does uncover some of your at least on the surface, some of your possible behaviors. And as I said at the last class, I said, when we really think about finance and financial literacy, we always think of of what we see. It's the money, the cash, the tool, but we rarely look at the emotional connection. So part of these insights when you're doing these personality behavioral quizzes, money and finance is definitely an emotional connection. It's not just about the numbers. It's deeply emotional, and that's what drives our behavior and decision making. And you have to try to get to understand a little bit more about your money personality. So this is one window of kind of opening your eyes a little bit to things that you perhaps take for granted. And when you take it for granted, but once you kind of understand it, then you can now course correct. Like I said before, a lot of things will happen in childhood. So you have that childhood influence. So even when you said you might not necessarily agree to what it said about the behavior, but when you start reflecting, perhaps there were some influences in terms of you becoming a high performer, right? And I've done this quiz a number of times, and as I do it and I get more aware of a particular area and I start working on it, I find after I develop new habits, the quiz changes. So I definitely used to be a conqueror, for sure. All the time working, working, working. I'm a workaholic. Still am to a thing, but over time I have probably found areas where I can enjoy myself. And before I never used to actually carve out time to enjoy myself. So I find it quite interesting that now I'm a hedonist, and a hedonist enjoys life to the fullest and doesn't let the money restrict them. So it obviously is evidence that you can, once you understand your money behavior and your patterns, there are areas where you can work on to kind of change that outcome. So yes, child influence is a very big one. I mean, one question I would ask is, what is your earliest memory related to money? Think about it. Maybe you were 3, maybe you were 2. Your mother said, don't touch that. Or money don't grow on trees. And you heard that for a very long time. Let's hear from the stockpilers.
Organic one. And the cars from a sofa when it stops. I get to think enough.
I'm hearing someone. Manifa? Manifa, you with us or it's your audio?
Sorry. My background is noisy. I'm heading to the boat. Sorry.
Okay. All right. Who here was asked, who's a stockpiler? Dawn was a stockpiler. Who else is a stockpiler? Julianne? Let's hear from Julianne. Octavia? Therese, I want to hear from the stockpilers. Has everyone taken the quiz, huh? Because I only see a few people in the chat that said they took the quiz.
Well, I'm not sure everything on it is that accurate.
Okay, who's speaking? Terrence. Okay. So let's hear your point of view.
Well, I do look out for deals because I don't believe in spending money unnecessarily. I'm not opposed to treating yourself, that kind of thing. But if you could get the same, the same quality, the same service, the same joy and so forth at a fraction of the cost, I think, that's a good way to go. The part that I don't really see is the having plenty money to spend.
Not yet.
I'm not there yet. But it's interesting. It's really interesting to know that you could do a quiz and get an idea as to how you are financially.
An
So
idea.
I do believe in saving for a rainy day, because you never can tell what will happen. So I do believe in having that little chunk of change put aside. I think I learned that from my parents, because that was a saying that we would always use in the home. You have to
Uh-huh.
save something for a rainy day. So I think
Okay.
I kind of grew with that kind of
Well,
mentality.
mhm.
So even though sometimes I may want to spend money on something, in the back of my mind, I'm still thinking, okay, how could I save some of it as opposed to spend all of it? Yeah.
Okay. So that's a good one, and you pinpointed something about your childhood and in the home, and it does influence our behaviors when we grow up, right? It sits in the back of the brain somewhere, but it still manages to control us even in life.
Yes, it does. Yeah.
So, because it does influence your value system and your belief system about how you see money and how it's represented. Some people think, how many of you really believe money is the root of all evil? Anyone?
I don't think money is the root of all evil. I think it's the love of money, because you can have money and put it to good use, and you can
Yes,
have money and like just be totally wicked with it. So I think it's the love of money that really causes the problem, because we all need money to get by in
yes,
life, but it's how we feel towards it and how we think that we can use it that tends to cause the problem.
exactly. How we feel, how we think, and the things but then there's some people, so when you also think about how money is represented to you, is it a tool or is it something, you want to control? And your outlook on what money is definitely has an influence on you getting it. It's really supposed to be a tool. Very simple. It's a tool that enables you to exchange value. Very simple. But your mindset is very important. So exactly, Julianne. Your mindset is very key. So childhood influence, also your environment can influence your values and your belief system. And if you have a belief system that developed over hearing many, many years, and you can still remember, just think about that. That belief system, is it positive? Is it negative? Because listen, saving isn't bad, right? But if you're only saving and isn't that what the stockpiler does? Save, 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 save for a rainy day. But guess what? You can be saving for a rainy day, but you're not putting the money to work. You're putting it in a savings account. They're probably giving you 1%, 2%, when you could really put it in something else that can put the money to work, right? So
Yeah,
remember,
that's one of the reasons why I was saying, like, being considered the stockpiler. I didn't see everything about it being true, because even though I save, if somebody comes with a need and I can help, I'm gonna jump for that. I'm gonna try to help out. So there were one or two little areas in the description that didn't really fit,
yeah,
but it's quite interesting, really.
that's normal. That's normal. I think the quiz will look at your biggest attributes. Like you could be a stockpiler, but still also be a little bit of a nurturer, So all of us are a combination of these things. It's which traits stand out much more that can influence your life. right? And what you just said there, you stockpile, but you could give it to somebody. I didn't hear, oh, I stockpile and I actually invest it and put it to work. You hear? So,
Yes, I
okay.
hear you.
So we had, okay, we heard from stockpile. Any idealists in the group? Anyone was an idealist? Everybody quiet? Okay. Any idealists? When you save money, you actually lose because things are exactly that keyword inflation. Yeah. People don't stress me when I tell people, at least my generation, when we talk about things like pensions and stuff, we don't necessarily believe in our pension system because of the nice word inflation. Now, my mother is 87-year-old, she's 87, and lo and behold, yes, she might be getting a little pension, but everybody's funding up because of inflation. So I personally don't believe in, unfortunately, don't believe in the systems that we have for pensions because they don't factor in the fact that money loses value every day. And this is the reason why we have to also develop our investment mindset. In the Caribbean, especially in the Eastern Caribbean and in St. Kitts and Nevis, we're not necessarily programmed or taught to really invest. We're programmed and taught to save your money. But I think that is why ECCB recently launched that course maybe a few years ago for savings and investment. Why? Your cash is an asset that needs to be put to work. Money needs to be put to work. Money cannot sit down, stationary. So this is very important because money loses value every day. That's right, Bronte. It loses value every day. So very important. So we have no idealist in the group. An idealist is someone who recognizes the necessity of money, but really prefers not to be concerned with it. If you're like an artist and all you want to do is draw and paint and you couldn't be bothered, but when it comes to your financial stability, it's just really a mess because you either can be bothered with it or it's just too stressful to think about it. So that's one area. Any celebrities in the group? Ladies, there are 40 people on this call. You're telling me all 40 people did this quiz? Hi, Sarah. Who you're in the group? I didn't see you there.
Good night,
Okay.
everybody. I joined late, so I just finished the quiz, and it said I'm
Okay.
a stockpiler, but from my phone I couldn't see some of the options at the bottom.
Okay.
So I'm gonna try to do it over.
Okay. So you're stockpiling. Are you the kind of person that saves a lot?
No, I don't see.
Save?
No. Not at this point, because last year I
You know
became
what?
a first-time owner.
Maybe you need to do the quiz by yourself when you're quiet and you're thinking clearly.
Yes.
Okay, Valerie Thompson mentions a good thing. CDs. Anybody knows what CDs are? Certificate of deposit. That's what a CD is. So let's just have a quick conversation about that. She talked about, Valerie says, CDs and shares are quick ways of investing cash. Good. Valerie, are you invested in CDs and shares? And what sort of shares? And are we talking local as in SKN, or are we talking international? Valerie, you can speak. We have the same name, by the way.
Are you hearing me?
Now I can hear you.
All
Yes, go
right.
ahead.
My CDs and shares are local investments
Okay,
in the banks and in local companies.
okay. The
it is
local
diffi-
companies are the ones listed in the ECSE?
Yes.
Okay,
Yeah.
okay. Sherry,
Well, I have one outside of St. Kitts Nevis, outside of the Caribbean, but most of my
what?
ships are local.
Okay, very good. So that's for other people on the call. A certificate of deposit, you can actually go to the bank. Banks normally offer it as a product where, let's just say you have a lump sum, let's just 5,000, 10,000. And you want to like put it in a fixed deposit maybe for 2 years, 3 years. And depending on the bank, they might give you a special offer, a special rate for your certificate of deposit. It's like maybe 3%, 4%, 5%. It really depends on the institution. So you would normally put in like, an amount. So it's a way of, if you've saved, if you've been doing like a bit of saving and you get a lump sum, then it's always a good idea to allocate some of that and put that to work because it will earn you interest. And it's money you're not touching. So it's literally has a block on the bank. It has an admin hold. You see it in your account, but you can't touch it. And it's working for you. So the bank, of course, this is how banks make money. When you put deposits with them, they can now leverage your deposits and get additional money from the central bank, and then use that to give out loans. And then when they earn interest, they give you a share of the interest. It's like, thank you for keeping your money with us, and we give you a share. So that's what a certificate of deposit product is. You can check. Some banks call them fixed deposits, etc. We spoke about the other class about equity, and equity is where you raise funds and you give shares to an investor, and so they become part owners. Even if they're small shares, you still get ownership into the entity. So generally speaking, when you are investing into a company and you give them money and they give you shares in return, you have to understand what type of shares you are getting, okay? There are some shares that give you what we call dividends, meaning at the end of the year, whatever profits that they have, they're able to then allocate some of that to their shareholders. There are some companies that probably are not listed on an exchange or anything. If you get a share, sometimes a few companies that are startups offer me shares, and I tell them straight to your face. I said, first of all, I don't really understand how you got your valuation because you're not in any public market. And right now, these shares don't mean anything to me because it doesn't have value and I don't see how I can, grow it. And a lot of these shares may not offer me dividends. So when we talk about opportunities in investing, you have many types. You have what, for most of us who prefer investments that are very low risk, we tend to prefer what we call fixed asset investment, a fixed income type investment. These are investments where you make your investment and you get a fixed income from it. So something like a certificate of deposit does that. Shares that provide some dividends every year do that. So if we're thinking about who offers shares in St. Kitts and Nevis, think about the big corporations, financial institutions that you can buy shares, like a national bank. Basically, if you go to the Eastern Caribbean Securities Exchange and look at the list of companies there, most of those companies, one can actually invest in them and you can get some sort of dividends from them. But of course, for companies that are listed on the ECSE, that's really our exchange. You have to go through a broker, which might be a bank. So that information is available, and anyone who's interested, I can put you on to someone at ECSE to discuss those options. Valerie said other things like purchasing land. Yes, a lot of us like to purchase land. Land is a bit long-term, but it's a nice way of making sure your money doesn't get devalued. Because when you really think about, especially now with inflation, when you have a big lump sum and you can allocate some towards land, land appreciates over time. So it's really a long-term saving strategy. You can always eventually liquidate the land, or it becomes a potential asset that you can put to work. So yeah, we're doing agriculture, so we could put it to work. We could, lease it to another farmer. We could, put a greenhouse on it, something. But it's an asset that you can leverage in a great way. So that's good. But of course, it's long term, but it's really good to hold in your portfolio. The other thing, I think we have exhausted. The other thing that I do like to invest in, and it really puts my money to work. Let me see if I could pull up ECSE right here. Is treasury bills. Anybody familiar with treasury bills?
Yes.
Okay, so think of government. So we're all individuals. If you want money, you have different options to go get money. You either go get a loan, right? What was that? Oh, okay. That's ECSE, sorry. You either go get a loan, and a loan will come with some interest, fixed interest, etc. Or you go to an investor might give you a commercial loan, or you might strike a deal with the investor and maybe do a revenue-based loan. We can talk about that. That's really good for agriculture, and we need to structure more like that. Or you can go to an equity investor. But think of government now. Government, yes, the government has ways of generating its revenue, apart from taxes and taxing us to death with the imports and so on. Government sometimes needs to manage their cash flow, just the same way as individuals and businesses have to manage their cash flow. So within this context, they sometimes list on the Eastern Caribbean Securities Exchange. They have a government securities component in the exchange where they list treasury bills and bonds. So the two difference, they're both debt instruments, but treasury bills are short-term debt, meaning sometimes, look at this one that was just launched just yesterday, 91 days. This is Dominica, Commonwealth of Dominica. So they're looking for some money and will pay back within 91 days. So they have treasury bills that are 91 days, some are 180 days and so on. Me personally, because on the one hand, as an entrepreneur, I'm very I'm a risk taker. But sometimes with my money, I could be very risk averse, meaning, depending on where I am, I don't want to lose too much, or I make decisions so that I still want to invest, but I don't want to reinvest blindly. So you're not going to see me putting all my money into a startup company that might fail, okay? Maybe I might find a company that maybe has addressed a lot of the risk areas, and I might put maybe a portion of my investment in it, but you're not going to see me put the whole thing into one. Besides, you shouldn't do that. You have to always diversify your investments. Valerie said she's scared of treasury bills. That's true. I'm more scared of treasury bonds because a bond is many years. Some of these treasury bonds can be for 5 years, 10 years, 15 years. Anything could happen. The government could go broke and then they can't pay the investors. But for me, if I want to invest in a treasury bill, I first monitor the country I'm looking at and seeing like how the Ministry of Finance is handling their bills and so on. And if I find in a particular year they're doing quite well, like I would probably invest in that. Like right now, Commonwealth of Dominica, 91 days, December, Christmas. I guess, yeah, and not so bad. Let's have a look. I recently done this slide, so let's have a look. So, and then the reason I like the treasury bills, depending on the rate. So this one says, Government of Dominica, they're trying to raise 20 million. So it's like short-term capital, and it's 91 days bill issue, meaning after the 91 days, you will get your original investment and whatever the returns. And so see the brokerage firm, so you can get it on National, First Citizens Bank, and St. Vincent and the Grenadines, Bank of St. Vincent, and Bank of St. Lucia. So these are the brokers they're using. I wanted to see what the rate was, because I remember one time I did an investment and I got like a 5%. I think that was the highest I've seen, 5 or 6%. 6% return in 3 months is amazing. And I remember I put an allocation that I just put in treasury bills. I did it 3 times in the year and end up getting a return of 14–15%. But again, that's for someone who has the time and can actively look at the investment opportunities to do a quick turnover and so on. But then again, when you always make investments, you need to make sure you analyze what you're investing in. You have to be 100% comfortable. You need to know what you're doing. If you ask questions, you don't go blindly, and this is why you have to continually invest in your education before you take the leap. Valerie said she is scared, and she has a reason to be scared, because remember, you have government, well, we're all in the Caribbean, we all understand government and politics. You can have a change of election tomorrow and anything could happen, so if you do, the worst thing that I've seen some people do is take all their savings and put it in one investment, and then something were to happen, right? You just have to understand. Hold on. I think my dogs are going crazy. Hold on one second. My apologies. So yes, politicians could change, government could change overnight. It could affect the market. Even look at us in this international, right now, we're all going through an international crisis, you know, for it's back to 2008, and it's not caused by the same thing. It's like a fallout after COVID. Plus you have other crises with the war in Ukraine. The fact that it's not like we produce wheat. So where's the flour coming from? So all these international things are causing a lot of friction. You have energy crisis happening at the same time. So things can happen. And so when people talk about investments, you have to understand one thing, that you might invest in some things and those investments will fall. This is why when you're learning about investment, you understand that there are risks. You have to understand what sort of risks they are and how persons are mitigating risk. So this is another skill set you need to acquire. You need to understand and become a risk manager, because everything is about risk and knowing that something is to happen. Do they have a plan for if such and such and such would happen? So those are the things you want to make sure. How are the people addressing the risk? And also you can reflect and look at that yourself. You running your business as a lens of an investor. Would you invest in yourself? I'm not talking about emotional. I'm talking about really and truly. If someone were to give you a check for 500,000, have you de-risked yourself enough to take that check? What are the gaps and what do you need to do to put in place to ensure that you can give back that money, or you have de-risked yourself sufficiently? So risk is, without going, the risk of loss is always high. There are some investments that would have a much lower risk. Even certificate of deposit, you can invest a certificate of deposit in the bank. You know how many banks went under this year in the US? Quite a number. So it's not saying that, there's no risk at all. Just know that there are risks, and you should not ever put all your eggs in one basket. You need to diversify your portfolio. Okay. Julie asked, would you recommend investing in international stock exchanges? Again, it depends on what you're investing in. When you think about international stock exchanges, are you thinking about investing in what? What products? Is it for shares, meaning in companies? Are you looking at established companies like I don't know, banks, the Bank of America, or looking at stocks like Apple and so on? With any type of investment, expect the potential, the risk of loss, and you have to also make sure you understand the fundamentals, you understand the company that you're going to be investing in, and you can understand the trend. So actually, for like stock investing, that's why they have stock investing has its own particular course, because you need to be able to understand the market trends. My son, he invests, he's into stocks, but he does a really good job on fundamental analysis. And he does like a bit of day trading from time to time. He's a bit risk averse. He's been very good at growing his portfolio, but I can tell you, it's like he needs to almost do it almost on a full-time basis, because every minute he's checking the news, every minute he's analyzing the financials and so on. So my suggestion, where that is concerned, before you just take the leap and jump into it, you have to really analyze and understand that market. And one of the ways most people tend to do it is by joining like money clubs or financial clubs. Now, we don't necessarily have one here, but it would be a good idea since we're all in St. Kitts. Maybe we can host a couple money clubs so everyone can analyze companies together, etc. And this way you can build your knowledge base. So that would be a good idea. Amanda said she'd like to invest, but clueless, you know. She tried crypto, no significant gain earned loss, okay? Again, how did you try crypto? Did you go to someone who was telling you they have a trading program and buy this crypto? Or did you spend time really analyzing crypto? And you have to remember, when you're thinking about shares and you're thinking about even cryptocurrencies, not everyone that says they're an investor. Know the difference. We have what we call speculators. Speculators do not invest. Speculators like to guess and take chances. It's like gamblers. If you've ever gone to Marriott, to the casino and watch some people throw out wads of cash and gambling away on those tables, those persons are like speculators. It's a game of chance. They take a risk, they look at the market, they pump and dump. There are no ethics to it. They're not really real investors. For example, in the crypto space, and you do have real institutional investors, would invest in like established coins like Bitcoin and so on, and hold it, because it's not for flipping and gaining. You have to look at it like land. When you buy land, are you looking to flip it the next day? Except you're a flipper. But normally you buy land for a long term and so on. So it's similar to that. But in any asset class, you have an interest in, make sure you take the time to have 100% product knowledge. The same way you're taking time out to understand how you are investing in your agribusiness is the same way you do need to take time to see how you're investing in other things, right? So just to add to that, there are some other ways that you can quickly mobilize some savings, right? So apart from your traditional banks that have these certificate of deposit, I think since we're in St. Kitts, I believe TDC has an accumulator. Anybody has used TDC's accumulator? Anyone in the group?
No.
Has anyone used what?
TDC.
What is
TDC
it?
Finance.
What?
They have a product called the accumulator.
No, I bought my shares there a long time ago.
Ah, okay.
So I don't know about that. But it seems as though they have
Yeah,
shares that are cheap right now.
yes. No, but apart from the shares, so if you go to TDC Financial Services, they have a product called, let me see if I can find it here. It's probably here, it's in here somewhere.
You mean
Oh,
Finco?
hold on.
Yes, Finco. They have
Finco,
an
yes.
accumulator.
You mean
That's
Finco?
the accumulator.
Yes, Finco,
Oh,
which is TDC's finance company.
yes, TDC's finance company. They
The
keep changing the
accumulator,
name.
and it's something like a partner hand. You pay a set amount every month, and at the end of the term, once you don't break it, you get the
Yes.
cash plus the interest.
Yes.
Oh, really?
So this is really good. This is really, really good product. And it's like 3.5%. Mm-hmm.
Worth looking into.
Definitely. So like I said, don't put everything, but it's useful, even if it's something for like a short-term saving, where you're putting some in the accumulator. Once it accumulates and you have a lump sum, you can now put it in another investment or allocate some into your business, because obviously your business is going to give you some very high returns, and allocate some elsewhere. So you have to think of you optimizing whatever money you have and putting it to work. How are you putting your money to work? If you only put it all into your existing business, then you might not be able to have enough leverage to get it from somewhere else. So you do know you need to have like other type of funds, set aside some funds. So apart from setting aside, say, an emergency fund. So how many of you actually have these type of funds set aside? Emergency fund, a fund for your business, your own business fund? Anyone?
Yeah.
Okay. Judy. Indira said, go to Finco, it's like opening a new account, yes. But this service, I think it's really amazing. And I've been able to leverage two things, taking a lump. So sometimes, because I do different type of consultancies, I raise a lump sum, use that lump sum, allocate some into a certificate of deposit, then allocate some, since I'm not putting all my eggs in one basket. And sometimes I've had an experience before where I've put a lot of my funds into a certificate of deposit, and it was like for 5 years. And then things happened. I had like a period where I wasn't working, but I couldn't touch the money. So it was really frustrating. So I learned my lesson since then and try and, spread it around a bit. So I find this product is really good.
Yeah, that's a good place to put that $1,000 the government gave last week or whenever.
Exactly. I hope you haven't spent your $1,000.
A good place to put it.
Put it to work. You'll be surprised how fast it accumulates. And also, when we talk about partner hand, how many of you still do partner hands?
Nope.
That's working. A show of okay, Judy is into partner hands. So you have a very reliable group that you work in partner hands with. Antoinette, yeah, very good.
Yeah,
So,
yes.
I was
oh,
just about to comment on partner hand, and I remembered, growing up as a child, even at school, at secondary school, we used to have our own partner hand. Everybody puts $2 a week. And if there are 20 people, that was $40 per person. And that was good as
very
teenagers.
good.
And I'm thinking of the group, and I'm saying, yes, this thing of TDC, as we've seen, is a good opportunity. But what if
Yeah.
there was somebody needed to get maybe a new greenhouse or whatever? It costs $20,000. Say we in the group and we say, okay, we have there 40 persons online now, and say each person is interested. Okay, I'm going to put $500 a month. The person can get that project done, and
Yes.
it's going from one to the next, and everybody is moving ahead together. Yes, because in this thing with TDC, there is just your money. But remember, we talk about OPM, other people's money. If we come together, you can also leverage that and benefit even more. Get your project on the road or up and running much faster than having to just try and save the $20,000 on your own.
On your own, it
Yes.
takes longer. If you do it as a collective and have a plan, yeah, it does work. Does work. And some other countries, they have been able to kind of marry the partner hand susu model with other programs similar to Finco. So, you know, the account that gets these funds deposited, they put it in almost like this accumulated type of account, but they also use the SUSU model. So it's something to think about as a collective, honestly, because you have to think outside the box and, you know, working together and so on. No, partner hand doesn't give you any return on investment, but what it helps you do is mobilize a pool of money in a very short space of time. So whenever it's, if the pool is a big pool, because a lot of time for one individual person to try and get, as you said, 20,000, it can take a bit of a time. But if you're part of the partner hand, when your hand comes, you know, your SUSU hand comes, and you get the 20,000 lump sum, then you can now put it to work and do what you need to do with it. And if you're strategic in how you do this thing, because the key thing to the SUSU is making sure everybody can commit to their, whether it's weekly or monthly, etc. And you know things happen. But if the person who has the first hand is able to even put it into a facility or some of it into a facility, then you always have this amount you can put towards a SUSU. So you have to, or partner hand, depending on where you are. So you have to kind of see what other strategic ways you can keep up those payments, those contributions for the partner hand. So you don't falter in the partner hand, yet it's beneficial for everybody. As you said, if you have a pot where everyone's gonna get 20,000 in a year, and your chance comes for 20,000, at the end of the day, everyone will be able to buy a greenhouse, you know, if that is the goal. And with greenhouses, it's an investment. It can now increase your crop yields by 7 times, reduce water by 40, 50%, and all of that. I don't have to tell you, you already went through those sessions already. So looking at some local low-hanging fruit, you have the TDCs. Also, you shouldn't, credit unions, don't miss out the credit unions. Credit unions are trying to be a bit more competitive these days. So you have the First Federal, you have the St. Kitts Credit Union, and you have your Nevis Credit Union. And even as a matter of fact, I noticed that, yes, First Federal does have a multiplier. Let me see if it's on their website. Okay. First Federal at St. Kitts. Uh-oh. Forget First Federal Credit Union. St. Kitts. Paulette, you know about the First Federal multiplier? I do know they were getting more competitive, but I'll be honest with you, I'm a member, but I really have not been, I'm kind of behind, so. So the way credit unions work, for those people who don't know, credit unions are, what do you call it, People's Bank. Basically, they're membership organizations. And through members would then contribute and buy shares. So they're like your membership shares. So in other words, when you become a member of the credit union, you pretty much are an owner, right? And so the credit union works for the benefit of their members. They're regulated a little differently from banks, although these days there's a lot of pressure and there are a lot more regulations that have them almost like banks, but they're a little bit friendlier because of the principle that it's not just an external person opening an account in the bank. You basically have shares, so you're part of this. So like, for example, if you all decide here to now create your own credit union for agriculture, why not? Because, you know, or why not? Because it's supposed to benefit you. So the whole principle is when you open an account, what you're supposed to do is try and save a little, exactly, like Paulette says, like $100 every little month, build up so that they can see at least you are putting something towards your membership. And so when it's time to ask for a loan and etc., it's much easier than going through the banking system, because first of all, they would look at and see, okay, how much shares you bought, and also the fact that you're regularly, putting some money in there. And you see, financial institutions want to see utility. One of the reasons why it is hard for banks to lend is because a lot of us might have a bank account, but we don't put our deposits in the bank. So we're running the business, people paying you cash. And what happens with the cash? You hold the cash and you're going to go buy your inputs and whatever. But there is no record. There is no external record to say those funds came in. So as a habit, you should be able to be depositing, whether it is your credit union or a bank, be making these deposits, because that way they can see it come through. Even if you're putting the deposit to now spend it on inputs afterwards, it's fine. At least there's a register to say money did come in. And if anyone is to pull the banking, they can say, okay, this business actually has been generating quite some good cash flow, in and out, but something is still coming into it. So I haven't seen their they have certificate of deposits, you see. It says invest. And for 12 months, 3.25, that's higher than a bank. Most banks is like 2%. So 24 months, okay, if you have a lot more money, 4.5%, that's pretty good for a certificate of deposit product. And what is this? Oh, these are their permanent shares, as I said to you. You tend to buy shares into the business. And here you can get loans, business checking loans, borrow loans, and so on. And I'm sure if you go to the St. Kitts Credit Union and Nevis Credit Union, you have that. So these are like alternative options. I mean, don't, even when it comes to opening accounts, don't put all your eggs in one basket. Make sure you diversify. For example, because I know credit unions are a little less strict, much easier, more flexible. I think the word is flexible. More flexible. Even if I have an account at National or another commercial bank, I have another account at the credit union. I probably use that account for my savings or like for my emergency fund. Because when I say you need to pay yourself first, whenever you receive money, at least 10 to 20% should go into one of your long-term savings and investment accounts. I'm not talking about, okay, a salary that's going to be expended. I'm talking about it has to go somewhere that you can put to work. So these are the little habits. Okay. 7:30, let's take a 5-minute break. I'm happy where this conversation has led to without me having to go too much theory. 5-minute breaks, and then we come back, you give me your impression, and then we can move forward. Oh, wow. Returns on investments have ranged 6 to 7.5%. This is very high. I need to check into the share business with this credit union. People in the US are not making this type of percentage, I can tell you that. Okay, so 5 minutes, Toya? I should get one of this Pomodoro. Hold on 1 second. Let me pause. I think I have the right app for that. Robertina is asking if anyone would be interested in doing a partner for business. That's a nice creative way. Okay. Okay. There you go. Try signing. Let's see something here. For 5 minutes. Okay. How do I pick this up now? Okay. Perfect. Have you ever used that to focus? These days I've been using that Pomodoro technique. When I'm working, I set timers and I just zone out and pick my zones. Okay, Julianne, we'll talk one-on-one. All right, so welcome back. So I'm gonna go quickly and touch on a few things we've already kind of touched on, but just to underscore key takeaways. I always ask people what you're worth. Understanding and knowing what you're worth is very important. And they're key things when we think about worth. Wealth, worth, and wisdom are very key things when you think about financial literacy. So your wealth, meaning your entitlement to make money and achieve success. Your worth, your confidence, self-belief, self-doubt, self-criticism, and then of course, wisdom, how to think strategically, how to prioritize, and how to be willfully focused. It's very, very important. And one of the key aspects and one of the things we touched on today was really elements for you to start unlocking areas that probably you might have a belief system that you have that has been programmed or you have been programmed with, maybe through childhood connections or childhood influence, or maybe through certain experiences in life. So you can probably start thinking and asking yourself a question. If you can ever recall a time when money made you feel either extremely happy or extremely stressed. I can tell you, this is a fact. Like, for example, if you grow up in a family or if you have a mother that whenever she's stressed out, she goes vex shopping. I know it's go shopping. I guarantee you, as you get older, there's some habits you might pick up that might be as a result of that sort of behavior. You might not necessarily copy it or emulate it, but you might actually be the absolute opposite, going against that by, stress shopping and being a very stingy hoarder. So these are things that really you might think it's not important, but actually when they actually have a new field called financial behavior. It's very critical, very important, because before you can even start really fully taking control and taking charge, you have to understand what are the different influences over your life that are probably not physical, they're probably psychological and probably embedded deeply into your behavior. So you have to understand the root cause in order to start working on it. Because once you're aware, then you always consciously would try and implement something different in order to fight against it. And if you change and develop a new habit, if you do it long enough, it really becomes a habit, and then it actually starts to change your value system, your belief system. And this has to do also with goals. We started off our first class when I asked you, what is your magic number? A few people got quiet. A few people were like, okay, maybe I'm not there yet. Maybe I'm still in the planning stage. I haven't done my numbers, but you should not be afraid of setting a goal and setting a long-term financial goal, right? Because this way, once you have it written down, then it's much easier to then start looking at where you're going to get the financing, how much of that are you going to bootstrap? How much of that you're going to get a grant for? How much of that you're going to get some creative financing? You're probably going to enter into a SUSU or a partner hand, probably put that to work in an accumulator. But knowing is very important. We don't want to be ostriches with our heads in the sand and bottom in the air, and not paying attention. And listen, I mean, on this call, a lot of us are open, but I can tell you, even personal experience, 15, 20 years ago, talking money was very difficult for me because it wasn't really done in the family. And my sister, my elder sister, she's 7 years older than me. It is only now, after going through so much strife, she's recently gone through a divorce, that she's now openly starting to talk about money because she's going through so much, through that whole divorce experience. It's made her be like, because I used to tell her, I said, literally, I'll send her a picture. I say, listen, your head is literally in the sand like an ostrich. She's like, oh, no, I don't want to know, I don't know. But when she has to face these bills and she has to face all sorts of prospects of possibly losing the house, she had to wake up and say, oh my gosh, why has this been so difficult for me? So for some people, I mean, we just keep quiet about it. We're not in the habit of having peer sessions like this helps us talk about it because we can actually come up with solutions in a co-creative manner. So please, setting your goals is very important. You need to understand what are your short-term and your long-term financial goals. If I ask you the question, what are your short-term goals right now? And what is your long-term goals? Can anyone answer? And what is that magic number? And is it written down? Larazine? Janicia Morton? Hello, hello. Desiree Ward? Everyone's quiet. Can you hear me? Or are you just afraid?
I'm hearing you.
What was the question again? I was busy trying to close up.
I'm asking right now, if I ask you what is your short-term goals and your long-term goals, can anyone give me a quick idea of what their short and long-term goals are?
Hi. Hi, good night. Yes. My short-term goal is to be good and success. Okay, I don't have any short-term. I have more long-term than short-term.
Okay. So what are your long-term?
Okay, my long-term goal is to be one of the best female farmers in the Federation, have consistent crops, and to be a homeopathic doctor.
Homeopathic, consistent, okay, that's long term. Okay, nice. Are you looking at merging that into some holistic practices with the farm?
Yes, everything ties in.
Very good. Okay, and do you have a magic number? Have you done your planning to the point where you know what your magic number, what is your magic number for earning, basically?
Earning a
Like,
year.
yeah, what's your magic revenue number?
My magic revenue for the farm, I want $100,000 a year.
US or easy?
You're cutting in and out.
Sorry, US or easy?
Oh, US or EC.
Yeah, she you locking on? Call me down, down.
No.
Ah?
What's that? Go ahead, sorry.
Yeah, EC, because that is like more realistic with what I worked out, and in terms of the area that I have, that's more
Okay.
realistic. And in terms of the homeopathic, well, it's obviously gonna be less because those types of doctors don't really make money. So you know how that go.
Where are you, in St. Kitts or in Nevis?
Nevis.
Are you sure?
Pardon me?
Are you sure? Because
Sure.
Dr. Miranda does make a lot of money.
What Miranda does is not what I'm going to be doing. It's almost the same thing, but it's different. And she's more of a oh boy, and I forget what the word is right now, but she deals with more healing of the bones.
Yes.
Like massage. Yeah. For some reason it just lost me. But yeah, she does other stuff, but I'm going to be doing something like different, and that won't be cheaper. So yeah.
Segue, Beryl is asking, what is a homeopathic doctor?
Sorry, I didn't hear what you said.
Beryl is asking in the chat, what is a homeopathic doctor?
Oh, okay. Basically, a doctor that uses natural ways to heal the body, not any pharmaceutical route. You either use healing with herbs or something that's called heal. I can't explain, but just natural route, because the body can be healed naturally if you want it and if you have the patience for it.
That's right. Alternative medicine from nature. That's right. Okay, so before the time runs and leaves us, I think we've already covered a lot of things, and I just want to take this to give this visual for you, that your mindset is very important in terms of how you also make your decisions. So while we're looking at emotional intelligence, we should also look at also our mindset. And here is a graphic to show you that you have two types of mindsets. You have people who have fixed mindsets, which is the majority of the population. And as an entrepreneur, as an ag entrepreneur, one of the things you want to do is really to start opening yourself up to have more of a growth-oriented mindset. And the fact that you're on this call, you're most likely on the path to that. A lot of you have, again, those long-term goals. Set those goals up, see how you want to grow, how far you want to get. And well, for some of us too, who are participating to learn, you might not be there yet, but it's really something you need to focus on. So when it comes to, just really quickly, when it comes to like skills and intelligence, you're open you want to learn more, you want to grow and develop, which is most of you on the call. Your main concern is about learning and getting better and process focus. Again, I heard that from the very first day. A lot of you on the call have that mindset. So even if you don't necessarily have your farm up and running, you're still in the process of like learning, yeah, and so on. You know, entrepreneurship is hard. Flawless farming, agro-processing, it's incredibly difficult. I don't care if anybody tells you, being an entrepreneur is not all that rosy. And when it comes to cash flow, there's sometimes you're gonna have it. And those times where you have challenges, are you going to give up? Are you going to check out? Or are you going to hang in there, bootstrap, find creative ways of getting through it, working through it? So we have grit. That's why we're here. And then, of course, getting whatever feedback, and this extends to your business. Yes, you need to get feedback from your customers. And if you're not listening to your customers, you're not really doing much, because a lot of us will say, oh, we like to, maybe if we're a farmer, we like a particular crop just because we like it. It doesn't mean the market likes it, right? So are you listening to your customers and adjusting to make sure that you have product market fit? So feedback is good. Or is someone going to tell you, nah, I don't like your pepper sauce, it's a bit too salt. And you're going to take it personally and you're just going to tell them to move? Or are you going to say, oh, okay, what about it don't you like? When do you use it, etc., and find out a bit more information? It could just be their taste buds, or they might have an ailment. And how do you address mistakes or even failures? Do you avoid them? Like some people, everyone has at some point in their life issues with dealing with problems or problem situations. I think over time I've learned to use them as a learning opportunity, and I don't run away from them. I tackle them head on and I learn from it. If something happens, we're all not perfect, and sometimes things happen and things fail. Do you pick yourself up and say, okay, I'm human. Things didn't go the way I wanted it to go. Have I learned my lesson? Yes or no? And then you move on and continue. Are you going to hold on to it? This is very dangerous, because I'm saying this really important because I had a business partner a few years ago, and she literally had a fixed mindset, and it just became more and more evident when anything happened. She held, there are people who just hold on to the negative and can't let go. And I'm always focusing, okay, this happened. What can we learn from it? We're moving on. She hold on, and every time bringing it up. It's very dangerous, very toxic. Let's see the chat. Tara says, great vision, Akeisha. Tracy said, don't sell yourself short, you will make money. So meaning you might be able to scale up again when we ask you next year. It's probably 250,000 a year is your vision, but it's important to also write it down. So just really quickly, when you looked at the activity we did earlier this evening, and again, I think I elaborated on it, but I'll just go past this real quick. Everyone has a money story, and your money story can really reveal a lot about your mindset, a lot about your relationship with your money. And that quiz, at least maybe it might not have been 100% correct, but it gave you some insights into some aspects of it. I won't go into this before because we elaborated on it. And I think we have also elaborated on this there's some myths about money. People say financial decisions are rational, but I already told you financial decisions are rational and emotional. So it's not just about numbers. And emotions about money are bad? No. Emotions about money, as we saw today, it gives us valuable information about ourselves, things that maybe we overlook and things that we can change. So it's not bad to be a stockpiler, honestly. It's not bad to be an idealist, and especially in a financial crisis. I'd rather be a stockpiler, right? Or a hedonist, a celebrity. No, but that exercise gave you a little bit more insights to know yourself better and to be a bit more aware the next time you're making a financial decision. Why are you making that decision? What influenced that decision? Could it be something in your childhood? Could it be something about your experience? Did you have a negative experience with when you made a financial decision and you're repeating that behavior? Right? And how do you envision yourself? This is why I said, how do you envision your financial situation 5 years from now, 10 years from now? So Keisha gave us an idea of what her number was in a year. What about 5 years, 10 years, 20 years? It's very important. And you shouldn't be afraid of when you get your number, write it down, because really and truly, that works. So basically, your money script influences your financial behavior, and your feelings or emotions influence your money script. I think this we were clear. And other things, as I mentioned, that can influence your money story: culture, religion, again, society, how you're socialized. There are certain events I mentioned, events like marriage, events like divorce, even generational things, gender. These can all influence your money story. So I think we had our exercise already. When you get these slides, you'll be able to kind of practice and use these tools. This is called the money genogram, where you can literally map out your family and start thinking about, who did what, who influenced what. This is just a case study of when a 48-year-old, she's attorney, she's divorced, she's a single mother too, and she felt guilty about not investing. And when you look at her money genogram, you can see on her parental grandparents, the father was a judge. This is what he always used to say: he's not made of money. His wife was the homemaker, that's her grandmother. And traditionally, she's like, my husband is the provider, but I take care of my family. That's how most of us nurturers are. The son, Tom Jr., who's now retired, attorney, and he's 75, he believes because he grew up with his mom being the homemaker, so in his mind, the woman's place is in the home, right? And then he married his wife, who, okay, she's a homemaker, but she has a part-time daycare. And see, shopping leaves stress. Whenever she's stressed out, she goes shopping. And what were her influences? Her mother was a substitute teacher, always keeping a secret stash for shopping. That's how she reverts to shopping as relieving stress, because she relates to that, because her mom always used to keep away Vex money, right? And obviously one of the reasons the mother used to do that was her husband, he worked hard and plays hard. So as soon as he makes his money, he probably goes and drinks it down. I think we can identify with that. Right. And here you have now Gwen, whose father thinks a woman is a place home. The mother, she works part-time. When spending money makes her feel better, not saving makes her feel like a bad person. So the thing about it is, even if you aren't doing something, are you going to make yourself depressed about it or do something about it? but you can see the influences in her life. And these are some things that that kind of influence people's beliefs. So when you get these slides, you see a lot of money beliefs people have. Some people have a fear of rejection. Some people have a fear of success, you know, and these are all emotional things that can hold us back. Some people think, like my sister, money is just overwhelming until she starts getting comfortable, educating herself, being empowered until she's actually more comfortable to talk about it. And, you know, she always used to be very fearful, but one day I told her, listen, go to class for real estate, because she likes real estate. I said, well, rather than looking at other things to invest what you know. If you're familiar with real estate and you see yourself doing it, learn more about investing in real estate. And now she's much more confident in doing that. So your money behavior, and a lot of you recognize that nurturing is a normal behavior. So there is no abnormal behavior, let's be clear. And you shouldn't be feeling bad when you have a certain behavior, because everyone is an individual. You just need to aim to strike a balance that fits for your life. If you're the kind of person that's always giving, and not putting yourself first, well, maybe because you're running your business, it serves you as the chief cook and bottle washer of your business to put something away for yourself. Very important. So you need to strike a balance. You can't just give it all away. You're running a business. It needs to thrive. So you need to put something into it. We talked about investments. We talked about savings, and we talked about, well, we didn't talk too much about spending, but I think it was implied of knowing what to spend on and not spend on, right? And curbing crazy expenses. Things like shopping when you're stressed, you try and avoid it at all costs because it can really take away from your goals. Okay. I think we are close to time. Okay, I'm over. Let me just wrap up. So money isn't just what we think it is. Money is a tool. Money is a mindset. Money is energy, right? And when we start talking about cash flow tomorrow, oh, sorry, I keep saying tomorrow, next week. When we talk about cash flow next week, you realize no matter what, cash flows into your life and cash flows out of your life. So money, this is why I said you can't just pile up money in a stash in your house without putting it to work. Money needs to go somewhere. So I want you to reflect on the different areas that cash is flowing in your life, from your creation of money, which we're here for. You're running a business, it's an agribusiness or a farm, and that is your money creation. And you're tapping into your skill sets to bring you in. So that's part of the energy coming in. But you also have to look at how it is flowing in the different parts of the life. What financial value are you creating? How much money do you pay for what you bring in? Does your money bring value and energy back to you? If any of these things are out of sync, then you know you have to fix something, right? So it's you shouldn't be against money. Like we said, it's a tool. Just understand how we create it, how we manage it, how we make sure it grows, and how it gets put to work so that it can benefit you and benefit your family as well. So I would pretty much wrap up Now that we know all of this, we're now going back into the statement. So, okay, we've had all this lovely chit chat and talk. So how does this play and how is this captured? And the reason why we did all these other activities, it's for you to understand. Like, I've always gone to like different sessions where we look at balance sheets and spreadsheets, and I never couldn't get it. It's like, what's the link? But no one was able to give me this linkage, right? So cash flow is the lifeblood of your business. Cash flow is also the lifeblood of your life. As we said before, you need money as a tool to exchange value. Whether it is personally, for those persons who don't have a business, probably still working, you have a 9 to 5, 8 to 4, you still are trading your time for money, income, wages. So whether it is wages, whether it is you're doing something part-time and you're getting some extra revenue or income, you need to be able to understand how to capture it into a statement. And it should not be it shouldn't be rough like a science. We make it very simple. Whatever comes into your life, it could be wages, it could be revenue from a business, or if we're looking at an income statement from the business, or if you're looking at a personal statement, meaning you're getting paid maybe a royalty from your business, that income needs to be captured. So sometimes when you go to the bank for a loan, they normally give you a form that they try to understand what your personal financial statement looks like, what's happening in your life personally. And the same will be what's happening in the business. So money flows in. We understand the expenses because we do it every day, whether it is buying clothes, buying groceries, spending on a car, spending on this, we do it. But do we document it? And do we monitor what we're spending on, like really? So that's something you have to look into. Maybe for some of you, you might need to have some financial tools to help you with that. Even these days, you can do your business and they have certain tools where you can just send invoices from your phone and you can automatically get like a record. So the days of QuickBooks are kind of numbered. They have newer tools that can make it easier for you. And if you're a kind of person that wants to track expenses, you don't have much time to keep your big book. So take your phone and take screenshots of your receipts. And if you have an app that captures that information, all the book, good. So we know expenses, and sometimes we don't sit down to really capture everything, and we take things for granted. Like, how many people know how much top up you're making? How much top up you're spending on? Have you put communications as an expense? So I think income and expense, we kind of understand that. And we've talked a lot about assets today. And assets are what make you money. Liabilities are what take money away from you. You take a loan, it means you owe the bank. You take a mortgage, it means you owe the bank. So you might have a house like this one for 100,000, but you took a loan for 80,000. So technically you only own 20,000 worth of your house. You don't own the full amount. Liabilities are not bad unless you know how to leverage it. But assets, if you understand your personal balance sheet from a strategic standpoint, assets make you money. And not everything that looks like an asset will actually make you money. Your house will not make you money. It doesn't generate anything for you unless you have apartments and you're renting it out. Then it becomes an asset. Okay, Judy said she keeps track of all her expenses. Good. Is this part clear? So I'm going to leave and wrap up with this. So when we have our next session, we can continue our conversation on cash flow. We'll probably do the first hour looking at cash flow and then looking at some spreadsheets and stuff. And then I will try and share with you a grant. Actually, I'm going to share the link with you right now. Hold on 1 second. So how many of you are in need of equipment for your business? Hello, people? How many of you are actually doing agro-processing?
I haven't started as yet. I have one goat.
Okay.
The others say,
Mhm.
I have goats, sheep, pig, rabbit, fowl. The fence is complete. The farm is pretty much complete with fencing. And I have different ways to catch water. So I always have water.
Mhm.
And it's still a challenge because to me, I'm only 40% of what I started it when I first started doing the farming. I'm not even 50% yet. There's still a lot of work.
Okay.
But I would like to get a greenhouse because I want to try different ways of planting, different little techniques, because I also plant in containers.
Mhm. Very good. Okay, so we are into livestock. Actually, I saw a livestock grant being sent to the Ministry of Agriculture, so I'm going to forward it to Latoya. Latoya, expect an email from me.
Okay.
Share that grant with you, and I also would share the other one. I'm sharing this now in chat. There's this one that, anyway, it's open. Sarah, you there? I kind of got an informal okay to go ahead.
Sorry, yes, I'm here. Well, I'm just doing double duty, so I'm keeping.
Got an informal okay to go ahead. I think they were waiting for the minister to approve the verbiage of one thing, but I was told I should go ahead and share it still, so. It is officially, I wonder if I could share the guidelines here. Yes. So you guys.
Send it to me via, okay.
You can share, you can download the grant guidelines, and the link is the application form. This is a grant that the government of India is giving to the government of St. Kitts and Nevis to support small businesses in purchasing equipment and machinery for their businesses. So we're looking at agro-processing and persons who are into light manufacturing as well. Deadline is next week, and before we have our next session, there's also going to be another grant for up to 50,000. I think we have about 250,000 US dollars. So it's going to be up to 50,000 for that one. And these grants are going to be annual, regular. So if you don't make it this year, you plan for next year. Okay, so you can go ahead and get started. And when I get the formal okay, then I could send it via email. but I was told to go ahead. So. Awesome. So without further ado, I think I've taken up your time. Thank you, ladies, for another packed evening. Maybe you can tell me if you have any feedback on how it was today, let me know. We probably have space for maybe 2 questions or comments, and then we can wrap up.
Hi, I just want to say that I thoroughly enjoyed tonight's session, mainly because it kind of added a new branch of understanding for me, and I'm really appreciative of it. One thing I would just like maybe to share with the team, and you brought it out in your the last part of your presentation, but sometimes when you have, especially we women, with an entrepreneurial mindset, and the partner that we are with is not, it can be very difficult. So even in selecting your partner and going forward could be very important in getting you either to succeed or to fail and be discouraged. Just a point.
Thank you, Robertina. Anyone else? Indira said, awesome, thank you. Okay. Carol says, thank you, quite good information. Anyone else? Is everybody happy? I mean, the fact that you still here meaning things are good, you know. Okay. Well, I'm accustomed. I've been thinking it's 14 years, so I know silence doesn't mean there is no interest. So thank you very much for giving me your time. I really appreciate it. I know it's in the evening. You have many other better things to do than to sit down and think about money. But I also hope that this session gave you a different perspective of how we view and look at money. I mean, a lot of times we keep focusing on the financial. Yes, you're getting to the financials, but you have to know also the fundamentals in order to kind of attract that money as well. So our next session is going to be packed. Question. Latoya.
Yes.
I have one more session or 2 more sessions?
You have one more session.
Okay, because previously they've had to give me an extra session. All right, so I'll make the next session worth your while. And I'll try to balance it with some of the practicals, but also some tangible content. All right. Thank you, everyone, and have a very good evening. I appreciate your time. And I look forward for the next session to have more conversations. So everyone who's quiet, please, next week, I don't want to be talking by myself. This is about me also learning from you. So thank you, everyone. Thank you, Latoya, and have a very good night.